Hello guys, this is Ahmed Al-Aziz speaking to you and welcome to another training video with Forex Trading Signal. Today guys, we are continuing to speak about the US economy indicators and we are going to discuss in this video the consumer sentiment. So we have spoken previously about the surveys and different type of surveys such as PMI and such as the manufacturer indexes and the services indexes, and those were discussing the condition of the businesses and the condition of the services and manufacturing sector. However, we did not speak about the consumer indexes. So in this video, we're going to go to discuss these index in a bit detail. So stay with us, please, and we're going to go to start in a moment. So what does the UoM Consumer Sentiment mean? So UoM means University of Michigan in US. So this university is preparing an index, and that index called University of Michigan Consumer Sentiment Index. So what does this index all about? So basically it's a survey. So it's a random sample of cell phone numbers. So those a group of people in the university, and those people, they are sampling a few cell phone numbers and they are calling them on the phone. So it's a phone interview or cell phone interview, let's say. So it's a survey about 600 or 500 consumers in the public. So they select 500 or 600 consumers from the public randomly, and they ask the respondent to rate the relative level of current and future economic conditions. So they ask them about the businesses and how the businesses looks like in the future. So there are two revisions for this indicator. When we say this indicator, we mean to say the consumer sentiment and with the one which is produced by the University of Michigan. So the first indicator, which is the highly impact indicator, which will be represented in red in the Forex Factory website, and we will see that in a moment. We call it the preliminary University of Michigan Consumer Sentiment, and that is the advanced indicator or index. So this preliminary index will have the highest impact in the market. So the second revision, which is the revised University of Michigan Consumer Sentiment Index, and these will be having lower impact than the preliminary index. So now if we want to look to the survey and see how it looks like, so you can see here, this is the surveys of the consumers, which is produced by the University of Michigan. And you can see here the preliminary data or result is appearing in this website. And you can see the changes. So if I go to the index, I can see that there is a change of minus 8.7% on monthly basis and yearly basis 18.8. So what does this mean? When the changes goes in minus, that means that the condition is worsening and not good. So what does this mean? So you can see that the index of consumer sentiment data result are here, and you can see the comparison between the month and the previous month. So if we take October 2022 and compare it with November 2022, you will find that the difference between 59.9 and 54.7 is almost on monthly basis minus 8.7%. And this data means when it's minus, that means the condition is worsening. If it's positive or above expectation, that means the condition is getting better. So we will see that also in a moment. Now, coming back to this survey, so we understood that this index is survey about the consumers and they are asking them about the business condition and the situation for them and their family. So let's look now, what does this survey look like and what are the questions they are asking through the phone for those consumers. So you can see now the survey of consumers or the questionnaire, which is used for calculating that index. And this questionnaire consists of almost like 50 questions, and they will ask the consumers about the condition in general, if it's better, same, or worse. So if we start with section A, and you can see section A here, and let's take like one or two questions. The interviewer or the caller on the cell phone, he's asking the consumer, which is picked randomly, the following. We are interested in how people are getting along financially these days. Would you say that you and your family living there are better off or worse off financially than you were a year ago? So the answer for this question, I am better now, it's still the same. No, it is worse, or I don't know. So if you say better now, they're gonna go to ask you again, why do you say so? Are there any other reasons? So if you say same thing. If you say worse, you have to give justification. By the way, this questionnaire is voluntary questionnaire, and nobody's going to force consumers to answer this question. Those are volunteers by themselves, and they will choose randomly the people to sample different type of people. So again, section A, question 2. So if you continue, the questionnaire is continuing, and they will collect 600 or 500 sample of this questionnaire, and they will plot them in a chart. So when they plot them in a chart, they're gonna go to give you the result. So the result is scaled to target 100%. So how to analyze this index and how to use it to the market or on daily trading. So if you go to the Forex Factory website, you will see that the preliminary indicator here, consumer sentiment indicator here, and it is scaled from below 50 until 100. And in this indicator here, I just want to show you how you can pick it here. If you go here and search it, it is this one, and this is the recent one announced. And if you click on it, you will understand who's produced it or who prepared it and what is the implication on the market. So the implication here is actual greater than forecast is good for the currency, and this is released on monthly basis, and it is having two revision, the preliminary and the revised, and I'll show you the revised later on. And this is a survey of 600 or 500 consumers which ask the respondents about the business and the economic condition in general. So here is the data, all the data. So you can trace the history all the way back. And here how the index look like. So now I'm going to explain you this chart on Forex Factory website. In this chart, we will be having a three data here. You're gonna go to have the forecasted data, which is appearing in yellow dot or yellow rectangulars, and you will be having the actual data, which is the candles, and you will be having the revisions, which is dark blue rectangulars, as you see them here. So this is revision data, and the revision data is not too much important. The important one is the forecast and the actual. So what does the forecast mean? The forecast means it's the indication or the result which is forecasted, means that that is the expected answer or the expected result. So those expectations are based on the tools we use from the central bank, like interest rate hikes or interest rate cut, and based on the GDP data and the employment data. So when these people, they put forecasting numbers or forecasting result, they are based on data which is not related to this index. However, when it comes to the actual, that is the actual answers of that questionnaires from the 500 consumers or the 600 consumers. So now, if the answers were positive and were above the expectation, the forecast, that is will indicate that the economy is growing and it is better, and that is will represent the consumer confidence. So if the consumer confidence, that is also an indication that the consumption in the future will be better. Hence, if the consumption will be better, then the GDP and the employment will be better, hence the rate hikes will come. However, if the actual below the forecast, here in this candle, the actual here is above forecast, which is good. Here, the actual is below forecast, which is worse. So if the actual below forecast, that means that the condition is worsening. Hence, there will be no employment, no growth in the GDP. Hence, the rate cut most likely to come. So this is now the preliminary University of Michigan Consumer Sentiment, and this is the advanced version. However, so if you go down further, you will see the revised University of Michigan Consumer Sentiment Index again. And the revised consumer sentiment is less impact than the preliminary index. So the difference between the red and the orange and the yellow, the red is always high impacting, the orange is medium impacting, the yellow is low impact, and the gray, sometimes there is no impact at all. So guys, this is the index in simple explanation, and this is the consumer sentiment, which is produced by the University of Michigan in USA. And we have discussed how to find it and how to analyze it. And we have discussed also the two revision of it. And we have explained what does it contain. It's just questionnaire of 600 or 500 consumers. And these answers will be explaining whether the condition is worsening, better, or remain the same. So guys, if you like this video, please share this YouTube channel and subscribe to our channel and click the like button, and see you in next training video.